Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of April 29th. Coming at you a little bit late. It is Monday night. I had a golf tournament and didn't get home for Monday, so recording this on Tuesday, so we're already one day into the week. And each week I go through the same process, just looking at how aggressively I'm going to be deploying capital, whether I'm going long, short, anything that I want to look at throughout the week and kind of set up my week. And if you're ever wondering where this article is, if you're watching the video, you can go to the Trade That Swing website under stocks, and it is under stock market analysis and trades, and this specific article gets updated each week. So heading into the week of April 29th, market conditions are trying to recover from a sell-off earlier in April, but the market health indicators are still in poor territory, so I'm not going to be taking any long trades just yet. Short trades are still possibilities. And then we'll also look at gold, a bit of a situation in gold, different situation in gold and gold stocks, as well as Bitcoin. There are some watch lists you can check out. The best swing trading stocks watch list for April. This is going to be updated for May in the next couple days, and it's just two lists, one with very strong stocks, one with very weak stocks, that you can look for potential setups in those. And the current stocks watch list has not been updated recently because the market conditions have been poor, and it looks at specific trade setups, including earnings plays, tailor trades, chart patterns. There are some other lists you can check out, best performing ETFs, best performing stocks, and then these are longer term stocks, buy the dip stock list, buy and hold stock list, best long-term dividend stocks. And someone asked me recently why I even bother mentioning these, and it's because when conditions turn favorable, that's often when I look to buy some of these longer term trades that I've been eyeing. So that's why I just put them in there. Yes, this is mostly a swing trading type video and outlook on swing trading, how the market's doing, but it could also be used as a potential trigger point to get into some of those, really good stocks that you like for fundamental reasons, but maybe they've been beaten down a little bit because of the recent decline. If conditions improve again, once they do, then that can be a potential entry point for those. So how are the indices doing? How's the market doing? I look at a few different indexes, tech stocks, the NASDAQ 100, large U.S. companies, S&P 500, NYSE Composite covers a wide array of stocks, sizes, and industries. Smaller companies for the Russell 2000, and if we pull that up, you can see we had this decline in April. The NASDAQ, the NYSE Composite, the Russell 2000, the S&P 500 all had this drop. Even if we go to the Canadian index, a nice drop, and we're just trying to recover on all of these. We've been pushing up the last week or so. So overall, I would still call this in pullback territory. Once you have a sell-off, if we don't get that recovery quite quickly, usually these rallies will fade out within about 10 days, and then you'll start to see selling again. If we kind of rally for 6 or 7 days and just get a little bit of a pullback and then keep going higher, that's a good sign. But we'll often see these stall out kind of where we are right about now. We're about 6 days into this attempted push up, push higher, and if it starts to roll over in the next few days, that could be some lower prices. But we'll talk a little bit about that with the market health indicators as well, because there's some things we can look at there as well. Bitcoin, really strong run since late 2023, and you can see we are contracting here. If you're looking for the short-term swing trades, this can be very whipsawy. We've been talking about this for weeks, basically since Bitcoin hit 69,000, which is this green line, which was the prior high. If we look at historical examples of that, you tend to get these big whipsaws, up to about 20, even 30% of just whipsaws up and down around that level for a month or more. Prior examples have ended up running higher after that whipsaw period. Where that happens this time, I don't know, but I do like that it's holding up in this area and it's starting to even contract a little bit. You had this big drop here and the volatility is getting a little bit lower, kind of coiling up possibly for another move, and so far holding up. So we like that. But yeah, if you're just trying to trade in here, it could be a little bit whipsaw. The gold miners ETF, you can see it's run higher the last few days while gold has been stalled. We've talked about the relationship between the miners and gold in prior videos, and there's another video on it on the channel. And ideally you want to see those miners leading or at least moving with gold. Right now they're leading over the last few days. You can see them popping up while gold's just kind of stagnated there. So that's a good sign for the industry. Shows people are coming in to the industry, buying the stocks, gold likely to follow. Of course, we could have the miners fall the next few days and gold could fall as well. But overall, still holding up pretty well. Pretty whipsaw in here. I mentioned last week that I just wanted to see, a little bit more of a bullish move again. And so you can see we had a bit of if you look closely here, we had a little peak here, then another peak there, then we dropped to a new swing low. And now we're kind of doing the opposite, where we had this little swing low here, we had this little swing low here. We're trying to push up. If we have a pullback that starts moving up again, I think that'd be a decent entry point, but it is a little whipsaw, so I'd still be a little bit cautious in the gold names, but would, if I got the proper setup, look to get some exposure. Gold, same thing. We basically had this little gap down, but still a relatively minor pullback, I would say. And if we start moving up, looking pretty good. Keeps going lower. Obviously, we're not going to put on any more risk or add to positions or take new positions. Let's look at the market health indicators. So we have a chart of the S&P 500 up here. This is how many stocks are above their 50-day moving average. The MMFI is all US stocks. The red line is S&P 500 stocks above their 50-day moving average. And you can see we dip below, and we're just hanging out below that 50% level, which means less than half of stocks are above their 50-day moving average. A very crude measure of stocks in uptrends. It's generally going to be much easier to make money when most stocks are moving up and above their 50-day. So I like this indicator for telling me when to get in, be more aggressive, when to stay out, and right now it's in the stay out territory for the moment, hanging out below 50. Volume was important over the last few days, looking for possible follow-through days, which are strong moves to the upside on higher volume than the prior day. We did not get anything in terms of volume associated with any of these up moves the last few days. The NASDAQ 100 index was the only one that had a pop. I believe it was a few days ago, 1.65% moved up, but volume was lower than the prior day. So it doesn't count as a follow-through day, which is a pretty good signal of a bottoming process in place. We haven't had that yet. This is the rate of change on a daily basis, percentage, which is simply how much the S&P 500 moved in a day as a percent. And what I'm looking for here is big moves to the downside. Those are red flags. When movement's quite low, that is indicative of uptrending markets. We talked about this period here when I was doing these videos each week. We talked about this indicator, and even though the market was moving down, it was not likely to be a big massive bear market because we didn't get any of those big 2% drops when you get the panic selling. 2% drops in a single day, where you get that panic selling that is typically associated with those types of events. So this was a very rhythmic type decline. So far, same thing happening here. A rather rhythmic decline. That does not mean it can't pull back here and then go lower like it did before, but so far indicated rhythmic, just sort of a temporary pullback in the overall uptrend, likely to continue unless we start seeing those big 2% drops. If you look over here, I'd mentioned briefly that the rallies tend to fail before the 10-day mark, and you can see here 1, 2, 3, 4, 5, 6, 7, 8, 9. Right around the 10-day mark starts to fail and go lower. This one even a little bit less. Several days starts to roll over to the downside again. So we're at that point here where we either continue to push up or maybe we start to roll over again. This is the NYSE advanced decline line. Advancing stocks minus declining stocks is a cumulative number, and it's basically just moving with the S&P 500 at the moment. Pulled back, starting to move back up, not really providing us with a ton of additional information. The bottom indicator is upside volume versus total volume as a percentage, and we're really only looking for extreme values, either really low upside volume or very high upside volume on a particular day. The last signal was a bearish signal, which means only 10% or less of the volume that occurred on that day occurred in stocks moving higher. So that occurred back here in April. We haven't had any important signals since then. Sectors on the move. Oh yeah, the ultimate indicator, how many quality setups there are. Like basically, are you making money or not? And I've been trading recently because my signals tell me not to. And it's a bit too early to tell if the setups that are kind of starting right now are working, because we've had some pops to the upside in a lot of stocks following this decline over the last week or so. But we just don't know if they're going to run. They haven't moved enough to really hit any important price targets that I would have put out there. So I don't mind missing that first little bit of a trend, because if the trend does actually start, there's going to be lots of opportunities to get in. And I'd rather avoid all these false starts that can happen where the price moves up for a few days and then snaps right back to the downside. I want that more confirmed uptrend before I get involved on the long side. Sectors on the move, you can see consumer cyclical, technology, communication services, all pretty strong over the last week. Those were your top three. I usually exclude utilities and consumer defensive just because those types of stocks are generally slower moving stocks. They don't show up on my scan list anyway. And basic materials still in there just because was moderately strong over the last week. It's been, kind of up there, a little bit negative, but overall pretty one of the top performers over the last month and one of the top performers over the last 3 months. So those are the sectors to watch. So what am I doing right now? No long trades yet. Short trades are an option. Bitcoin and possibly gold related stocks and ETFs. I address those separately because while the stock market's in a bit of correction, the gold and gold related stocks, a little bit different scenario. They're still trending up and holding up there relatively well. So those are possible trades that could be taken at this point. But in terms of just general stock market trades, I'm holding off. And then there's always the option to day trade, swing trade. Swing trading is more this, at least how I do it, is this more sporadic where you have periods of activity and then we back off for a little while or maybe look at some short trades. Whereas day trading, you're most likely going to have opportunities almost every day to potentially make some money. Day trading is more of this, or swing trading is more of this, hit it hard for a couple months, then we back off, then we hit it hard for a couple months. So just depending on how you want that income flow or whatever, there's always the option to day trade, which is a little bit different, or swing trade. So that is your swing trading stock market outlook for the week of April 29th. Hope you have a great week out there.